Good morning, treasurers. This is your host Parthesh Shah from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 11th February 2022. In the international market, US CPI came at whopping 7.5% versus expectation of 7.2. This 7.5% CPI is highest since February 1982. There was a bloodbath across equities, debt, and dollar index became stronger. CME dot plot now indicates almost 100% probability with 50 basis points rate hike in March 22. US 10-year crossed 2%, trading now at 2.03, almost 11 basis points higher in a single day after the CPI was published. US 30-year is trading at 230. In the crude oil market, crude is trading at $91.41 per barrel. Short-term range for crude is 88 to 92. Expect crude to touch $120 per barrel if Russia-Ukraine conflict worsens, which means a death blow for emerging equities and emerging markets like India. In the currency market, dollar index or DXY is at 95.88. Higher CPI, stronger economy pointed dollar strength. DXY's today's range seems to be 95.78 to 96.25. USD CNY or Chinese yuan is at 635. Chinese New Year holidays are over now. USD INR with a low of 75.05 closed at 74.95. Support seems to be at 75.05 and resistance at 75.40. Trading strategy: US CPI has strengthened the case for stronger dollar and weaker rupee. USD INR will cross 75.50 very soon. Will be crossing 75 today for sure. On the domestic market, RBI surprised everyone on the street with their MPC outcome yesterday. Repo, reverse repo, policy stance, MSF, all unchanged. Market along with Knight research team was expecting a reverse repo hike, but RBI continued their accommodative stance as long as needed. The most interesting note was RBI's inflation forecast for FY23 at 4.5%, which is a risk, but for now, it cheered the market. RBI did not change the earlier stance to reduce the HTM limits for commercial banks from 22% to 19.5% by December 22. Market will be positive today as well and then may consolidate from Monday onwards. Knight research team is now expecting a repo rate hike by June 2022. Given policy stance change and reverse repo increase will be the first actions. 574 2026 was the biggest beneficiary, which closed at 592 versus 609, 17 basis points yield gain. 610 2031 closed at 674 versus 682, 8 basis points yield gain. 667 closed at 707 versus 715, 8 basis points yield gain. Strategic call: remember we had recommended a call for buy for 574 2026 once at 606 and then at 622. The average was 614 yesterday. Whenever clients who could not hold the position due to IDR fears had squared off the same position at 610 levels with 4 basis points gain. But for all those who are still holding 574 2026 will now be looking to square off the position today or Monday below or near 590. The gain would be approx 22 basis points or 80 paisa or 4 lakh rupees per lot. And remember, we smartly did the averaging as well. As majority of the gain has already come, Knight research now advises sell and book profits for 574 2026 near 590 levels. Remember, you don't need to fight each and every battle. You just need to identify which battle is worth fighting. Our Knight research team was sure on this outcome and had a stellar success with this call. Trading range for today. Remember, 610 range for yesterday was 668 to 694. 610 2031 day low yield was 669, just 1 basis points above our target. So accurate. 610 2031 range was for today is 668 to 678. There will be some positive bias today as well, and then the market is expected to consolidate. That's it for today. See you next week with the new episode from Night Snippets.